Well, good evening, ladies and gentlemen. Welcome to today's presentation, the covered call search, searching for covered calls and more. What we mean by more is in addition to looking at the PowerOptions Search tool to identify covered call positions, we're also going to talk about the tools that are available on PowerOptions to look up securities for covered call positions one stock at a time as well. Well, let's go ahead and get started. The first thing we always want to begin these presentations is what is PowerOptions? Well, PowerOptions is a patented suite of search and analysis tools designed for self-directed options investors. Our tools allow you to search across the universe of options in less than a second to identify only those positions in a given strategy that match your personal risk-reward tolerance. Once you've identified the positions, of course, you can quickly compare the risk versus reward and do further research and analysis on those positions as well. I am showing that sound is coming through. Peter says that he's not able to have any sound. Can the rest of you in the audience verify that you're able to hear me speaking and you can hear the sound coming through? I'm showing that sound is there. See, we got some other ones coming in. Oh, okay. Scott says sound is good. James says sound is good. Okay, perfectly fine. Let's just go ahead here. Oop. Okay, sorry about that, folks. Let me just send a message to Peter there to let him know that the audio is going through. Okay, perfectly fine. All right, now we also offer tools as well to help you paper trade, track, and manage your positions. In addition to that, we offer countless educational articles and help pages in the various strategies. Today's webinar is going to be included in the Help section, the Learning Center of the Covered Call menu. Now, Ernie Zarena created the PowerOptions tools over 17 years ago, but everyone here at PowerOptions uses these tools to trade their personal account, myself included, so we have many more years of combined trading experience. Now, my name is Mike Chupka. I'm the Director of Education here at PowerOptions. I handle a lot of the coaching sessions, education, webinars, and help videos for PowerOptions as well. I have co-authored 2 books on investing with Ernie, one on naked puts, which is a parody to the covered call trade, and one on standard collar positions, introduction to collars and protective option strategies as well. Now, as I mentioned, of course, we do support over 23 of the most commonly used option strategies. I am versed in all strategies on the site, and we have traded the covered call strategy extensively over the years. Many of you have heard me say that in the first 18 months, excuse me, when I started trading options about 11 years ago, I mainly did covered calls, and I started branching off into other strategies. And there's still some covered calls or collar positions I use in my account on a regular basis as well. But what we're going to cover today is, for those of you doing covered calls, using the search tool to identify covered call positions quickly. We're going to talk about how to search for different expiration dates, whether using standard expiration, weekly expiration, or crossing multiple expiration dates as well. We're going to look a little bit at some of the tips for creating a search for ETFs and for dividend-paying stocks as well for covered call opportunities, and we're going to discuss general tips and suggestions on the search criteria. In addition to that, we're going to show you a few of the tools that allow you to look for positions one stock at a time as well. Well, all that being said, that's a lot to cover. Let's go ahead and navigate over to the PowerOptions suite of tools. Excuse me, folks. And what we're looking at here, let me make sure that view is coming across. Fantastic. What we're looking at here is the basic view of the PowerOptions tools. PowerOptions, of course, is designed by a tab navigation system. So we have our various strategies, the main home tab, the My Portfolio tab where we track our positions, the Signature Tools tab, which has unique tools that are available only on PowerOptions, and then, of course, we have our strategy tabs as well. And what we're looking at here is the basic home tab for the covered call menu. Here we see that we have a basic overview pod for the covered calls, just a few basic bullet points. Many of you are probably on that point for the covered call strategy. Then there is a detailed link to a more in-depth strategy help page as well. Below that, you see a description of the basic tools. So for covered calls, we offer the Quick Find tool. This allows us to look for positions one stock at a time. The option chain, which I prefer to use when we look for securities one stock at a time, or I should say covered calls opportunities one stock at a time. We'll go through those a little bit later. The search, of course, is where we're going to spend most of our time today, but we're also going to spend a little bit of time on the sample searches. These are themed searches that are available in every strategy that you can use as a stepping stone to create your own personal search. And underneath of the tools pod, of course, you have the basic learning center where there's several white papers and articles related to covered call positions, managing covered calls, and other concepts of covered call trading as well. This is likely where you'll see today's webinar archived sometime tomorrow, either in the morning or in the mid-afternoon, early afternoon, I should say. Very well, let's move on. Now, using PowerOptions to identify a new covered call position. There's two ways that we can go. The first way that I always recommend to my customers is you might just want to start off under the Covered Calls tab in the Sample Searches tool. Now these are themed searches that Ernie and I have put together and the PowerOptions staff have put together to help you start off with a more generalized covered call search based on the strategy or the concept you're interested in trading. For example, we start off with the 7-11 report. This is a more aggressive covered call screen. It's looking for positions that are offering at least a 7% return if assigned with a high downside protection. Downside protection, of course, is simply the option bid price divided by the stock price. There's a default search here for broker and advisor recommended. These covered calls have to be on stocks that are in the S&P 5-star, those stocks that are 5-star rated by Standard & Poor's, and they have to be in an uptrend as well. There's a basic covered call screen for ETFs, where the inverse ETFs are removed from the search results, but you can also choose to remove leveraged ETFs as well, and we'll walk through that in a little bit. If you prefer to trade your covered call positions on dividend-paying stocks, there's a dividend and out-of-the-money screen and a dividend and in-the-money screen as well. Some other screen searches you might find here in the sample search menu are stocks with a low price-to-earnings ratio, stocks hitting new highs, covered call opportunities on large cap in the Safety First report, and then we have some themed searches, for lower price securities that are also in an uptrend and possibly highly recommended and showing good growth with stocks under $25 or under $10 per share, for example. Now to begin with, in our sample search menu, to access the results of a given screen, we'll simply click on that list. So I'm going to click on Broker and Advisor Recommended. And this is going to take us to a listing of covered calls that matched the themed report for that particular sample search. And because we went to the Broker and Recommended screen, we see a lot of stocks that we're probably familiar with, a lot of stocks that we've seen or heard about in the news, large cap discussions, what we tend to call water cooler stocks from time to time. Things such as United Continental, Delta Airlines, Spirit Airlines is there as well. Applied Materials, of course, Goodyear Tire and Rubber, Skechers, and so on. So common stock names and common security positions. Now we see just going across the line, we have our company name. This is just the default screen, the default columns. We have our stock symbol, UAO, current price of the stock, and then the change today. The strike price, so here looking at selling a December 55 call, which is 40 days out in time against UAL, which is currently at 54.83. So it's sort of a at-the-money covered call. We could collect $284 for that call premium, and this would give us a 5.2% downside protection. What that tells us is that the stock can fall 5.2%, or $2.84, before we're technically losing money on the covered call position. The percent if unchanged, 5.5% if the stock stays at 54.83 to December expiration. And our max percent if assigned, if the stock's above 55, we'd get a max return of 5.8%, and the probability of assigned is 49%. Now before we get into a discussion about the column selection and what's available, let's talk about how these results appeared. We clicked on the sample search menu, and here in the results table we have our listed results that matched the criteria that were used for that particular sample search. But if we scroll down below the listed trades, we can see the parameter field. And for our covered call selection, we have 4 different categories of criteria we can use to narrow down our universe of options to just what we want to see. We have the Options tab. So this is all the options criteria, which includes things such as the days remaining to expiration, or the option expiration time frame, as well as the time value of the option we're looking to sell. Implied volatility and implied volatility ranges, IV over HV, looking for undervalued or overvalued options. Our return criteria, downside protection, percent if assigned, percent if unchanged as well. Range in or out of the money. As covered call investors, we may sell in the money covered calls, looking for a higher downside protection, but giving up a little bit of the percent return if assigned. Or we may be doing out of the money covered calls, speculating on the stock moving and looking for a higher return. Or potentially we want to hold the stock long term and we're selling out of the money calls, hoping that they'll expire to mimic a dividend-like income. Underneath our range in or out of the money in our options criteria, we have the price and strike price field. So if you have a minimum requirement for your option bid price, you want to restrict the bid-ask spread of the options that appear in your results. If you want to use the Black-Scholes ratio instead of IV over HV, implied volatility over historical, to evaluate an overvalued or undervalued option. If you want it to screen by a specific probability or a specific delta, you can do that as well. And below that, of course, is our liquidity. When we talk about the option volume today, the current open interest, and things such as the put-to-call volume ratio and put-to-call open interest ratio. They're options related, but they also relate to the stock as well. Next, we have our technicals. All right, so our stock technicals, where you'll find things such as beta. And, how often does your stock move compared to the movement of the S&P 500? Things such as the average broker recommendation, percent of 52-week range. Again, some of you might want to look for covered call opportunities on stocks that are hitting a new high. Some of you may look for covered call opportunities or stocks that are hitting a new low, thinking that they're going to rebound back in time. Okay. Vaughn asked a question, could covered calls be applied to the Qs on a monthly basis for income? That is correct. A lot of investors will use ETFs such as the Cubes, SPY, DIA, and IWM to look for covered call opportunities on those positions on the broad-based ETFs as opposed to using a stock which may be more volatile and fluctuate in price. Other things you'll find under the technicals here, we have average stock volume. And for those of you that tend to use a little bit more technical indicators, we also offer a Bollinger Band screen. For those of you who are using Bollinger Bands, we might touch upon that later on in the presentation. Basic things such as a simple moving average. We wanted to look for stocks trading above the 50-day or the 20-day moving average, or if we wanted to screen for stocks where maybe the 50-day is above the 100-day or the 20-day is above the 50-day as well. You can also screen for things such as the MACD line to look specifically for companies where the MACD is above the signal line. That's what I tend to look for a covered call position. I want more of a bullish stock. Now the fundamentals, this is where we'll find the basics such as stock price. If we want to look for dividend-paying stocks, we can enter in our required dividend yield for our securities. Market cap, earnings per share growth, price to earnings ratio, number of shares outstanding, price to book, price to sales, and so forth. And even now, you can of course screen to look for stocks that do or do not have an earnings date between now and expiration. For our covered call positions, I usually suggest checking the box looking for securities that do not have an earnings date between now and expiration. As we mentioned earlier, if you're trading on the ETFs, you don't need to worry about the earnings. But on the standard stocks, you may see a decline on your underlying security of 10, 15, maybe even 20 or 25%, where if you're only generating on average 2 to 3% per month with your covered calls, that potential decline from a disappointing earnings event, may result in a 30% unrealized loss in your position, which might take you as much as 10 months to get back to break even if the stock doesn't recover. So that's always something to use. If you are trading covered calls on a dividend-paying stock and you don't want to get assigned, meaning you're looking to hold that position as a core holding long-term and you're just selling out-of-the-money calls against it, you'll probably want to look for positions that do not have an ex-dividend date between now and expiration, because if the stock moves up and it's trading right at the money or even slightly out of the money on an ex-dividend date, you may be assigned early on that position if the dividend is more than the range you are out of money. And lastly, of course, the lists section. And here in the list section, for this sample search, remember we clicked on that broker and advisor recommended, we're looking specifically at stocks in the S&P 5-star group. They have to be rated 5 stars for buying by Standard & Poor's. Other lists you can use are things such as IBD, the S&P 100, value line portfolios, and so forth. And you could also choose to screen just against indexes and ETFs. And then we can also exclude a list. If we wanted to exclude the inverse ETFs or the leveraged ETFs, we could choose that from our covered call results as well. In addition to that, in the list field, if you wanted to screen specifically against a given sector or industry, we could screen just against basic materials, conglomerates, and so forth, or we could choose to exclude a specific sector or industry as well. If we wanted to remove healthcare or biotech stocks, for example, we can exclude those also. One last thing here before we move on, you can also create your own personal stock list. So you have a list of 25 to 30, maybe 50 stocks that you want to analyze for covered call opportunities on a regular basis. You can create your own stock list and just choose to select that from your include function here, and you'll see only those covered calls against those stocks in your list. Okay, now, although we can see which criteria were used in each one of these sections, for a quick view over on the right-hand side, we see what our active filters are for this default search, the sample search. As we mentioned, we're looking just for the expiration date to December, the next standard expiration that's at least 20 days or more out in time. We want our downside protection to be greater than 3%. We have to have a minimum percent if assigned return of at least 2% for the covered call opportunities that appear in our list. We put in a minimum requirement to receive at least 85 cents on the call that we're selling, and the previous option volume has to be greater than 0. So this is just a default here, but let's go through the rest of them. In the technicals, remember this was that advisor and broker recommended, so we're looking for an average broker recommendation of less than 2.6. We're looking for stocks trading above the 50-day moving average. The fundamentals, we're only looking for stocks trading between $9 and $100 per share. We haven't put in anything else. And in addition to that, we're specifically looking for stocks that are in the S&P 5-star lists. Well, let's say you wanted to evaluate opportunities that are, well, maybe a little bit closer in time. Standard November expiration is roughly 14 days away. So rather than going 40 days out in time, I may want to look to see if there's any opportunities that match this basic criteria for November expiration as opposed to December. Well, no problem. Underneath the options criteria in our parameter field, underneath our results, we'll just click the drop-down menu. We can choose to screen for all weeklies. If we wanted to look for weekly options, we could do a range, choose all month, and just look for any expiration between 5 and 14 days, which matches our criteria. But we're just going to go ahead and select the standard November expiration. Now that I've changed the basic filter, let's go ahead and submit this search and see what results we have. Okay, well, this brought in a very tight list. I'm sorry, we only have 12 days remaining to November expiration. We have 2 covered calls, sort of the at-the-money and slightly in-the-money covered call for AMAT, Applied Materials, and the same for UAL. We have the slightly out-of-the-money call, and actually they're both slightly in the money, sort of the at-the-money and slightly in-the-money covered call with those 50-cent differences, strike differences. Okay, well, I may want to open this list up a little bit more. And what do we know about a shorter time frame related to premium selling in options? Well, if we expected every 30 days to find a good, manageable list of results that offered a 3% downside protection and a minimum 2 or 2.5% return if assigned, going 40 days out, 35 or 40 days out in time, if I shrink that down to 12 days, I may have to give up a little bit of premium. And we're not going to see as much premium as we would as further out. So let's lower our downside protection for this shorter term search. Let's look for 2%, but we're going to keep our percent if assigned at 2% as well. We want to make sure the return is worth our value. Let's go ahead and submit that, see what we can do to open those up. Okay, well, still just Applied Materials and UAL. So I realize now that if we wanted to see more results in different stocks in the S&P 5-star list, probably going to have to lower my percent if assigned down to 1% to 12 days, which is not a bad return. It's almost about 2% for every 24 days or so. And that gives us more along the lines of what we're looking for. So out of the entire universe of options, Limiting it down to the S&P 5-star list, we only have 16 covered call results that are offering at least a 2% downside protection and at least a 1% return if assigned. Other things I might choose to add in this screen, remember what we discussed before, is I might want to go back into the fundamentals and make sure that none of the securities, those 16 results that came up in my search, have an earnings date between now and expiration. Let's go ahead and submit that, see if any of those 16 drop out. Okay, so 4 of them did, and it looks like the AMAT is one of the ones that's no longer in our search results. So there's 2 or 3 covered calls from Applied Materials dropped out of our list because they do have earnings between now and November expiration, the standard November expiration, which is 12 days away. All right, now there are some things I added to my search, such as the earnings date we just put in as well. And we may want to see volume and open interest, see how liquid these options are. Anything that you can use as a filter in the parameter field below, you can choose to view in your columns. So let's just click on Choose Columns. And this will allow us to pick and choose which options we want to, which criteria we want to see for the stock. So if I wanted to see things such as the dividend yield, if any of those stocks pay a dividend, or if we also wanted to look for the earnings date that's located a little bit lower, we'll just check the box. And up at the top for our options criteria, I may want to see things such, again, as the option volume and open interest. Once I've selected which data criteria we wish to view in our columns, simply submit and save the results. We're prompted to close the window and then to refresh the page. So we'll keep the same search settings. We kept the same search criteria even though we haven't saved our search yet, but now we have our earnings date selected, and we see only a couple of our securities that came up in our list, such as EOG, Delta. Okay, EOG and Delta are the only 2 that pay a dividend, and it's a small dividend, less than 1% per year. We do see we have good liquidity in all of our options here. The current option volume, there's a total number of contracts traded today, and the open interest looks pretty good as well. And here's our next available earnings dates for the stocks that came up in our list. So we see that these ones here with the earnings dates listed, they're now beyond our current date, so beyond our current expiration date, so we should be fine there as well. Now that's just using a sample search or one of the default searches. If you go directly into the main search tool, you'll also have several defaults that you can use as a stepping stone. You can use things such as the Broker Advisor recommended again. We also have just a basic in-the-money filter, out-of-the-money covered call screen, Price Watch Alerts #1, that's related to the morning updates that you can receive with the top 5 or 6 covered call trades, and weekly covered call screen as well. So those of you doing weekly covered calls, you can use that screen as a stepping stone to create your own personal search. But let's talk about starting a search from scratch. What would I look for to create my own search? Let's say that you're not really familiar with some of these filters that are being used in our default searches, and you're not sure if you'd want to use them for your covered call opportunities. You know enough about covered calls to know that you're going to look for a position where you're buying a quality stock that has a good neutral to bullish sentiment. It looks like it's been moving up in price. It's probably trading in an uptrend, but you still want good premium and you still want a good quality stock. What are some of the basic filters we'd use to identify a covered call screen? Well, let's go ahead and click Clear Filters. We're going to empty everything out of our results. Now first I'm going to set my options expiration time frame before I go any further. We're just going to show this. Then we're going to jump over to the fundamentals. We're going to come back to the rest of the options criteria. If you were just looking at weeklies, whether you want to be the 1 week out that expires this Friday or maybe 3 weeks out on the 3rd week series, a lot of the, in fact, almost about 95–98% of the options, the securities that offer weekly options now offer the continuous weekly series where you have 5 expiration cycles in a row. So you could choose to use all weeklies. We could look to November or standard December expiration. The 3rd Friday in November is 12 days away, and the 3rd Friday in December is 40 days away. Or I can select to view all months and use a wider time frame. So we know that standard expiration is 12 days away. We might be too close for this week to look for a weekly covered call position. It's only 4 days away. So let's put an option expiration time frame of 10 to 45 days. This will include everything that's a standard expiration either in November, 12 days away, December, 40 days away, or any weekly series that fall in between those two standard expirations. Now let's go over to the fundamentals. And the first thing I'll always tell a customer when they ask me what criteria should they use for a covered call, married put, or collar spread, even, or a cash secured naked put even. Well, those are the only strategies where the stock price filter really comes into play. Unfortunately, I don't know your account size, but I know my account size. And based on my account size, when I'm buying a stock for a protective position or for a covered call, I usually look for a range of between $5 and roughly $75 per share, because I don't want to take up too much of my account in one trade. Of course, if you have a higher portfolio, you may look for securities that are, within a wider range. I have a lot of investors that use PowerOptions that prefer only to trade stocks above $50 but keep it under $250. Okay, so that would just be the criteria that you'd enter. I'm going to go back to my range for right now. We're going to go $5 to $75 per share. If I wanted to look for stocks to pay a dividend for my covered call opportunities, I might just put in a percent dividend yield of maybe 1% or maybe 2% minimum and then see what results I get. But we're going to leave that off right now. One thing I prefer to do in my covered call screens and other strategies where I'm buying stock is I prefer only to trade positions on mid to large cap securities. Now at any time if you're not sure what a filter is in the parameter field, simply hover over the text link. You'll get a pop-up window. So the market cap basically shows us that mid-cap stocks are ranged from $2 billion to $15 billion, and large cap is $15 billion or above in general. So I'd want to look for positions that are $2 billion or greater for the market cap. And it shows me down below that the market cap filter here is measured in millions. Therefore, we just want to use the following values. So I'm going to use a mid-cap of greater than 2,000, or market cap, looking for mid-cap stocks of greater than 2,000. Another thing that might be important for a covered call position, buying a stock that you're expecting to be neutral to bullish, is kind of good performance or good expectation, good management of the company. One thing that Ernie and I feel is very important to that aspect is the earnings per share growth. We want to see stocks that have grown in earnings. All right, so we're going to put in a earnings per share growth of at least 5%, meaning we're going to look for stocks that have grown in earnings at least 5% or so in the last year. PE ratio, a lot of investors like to use a range of 0 to 40 to 0 to 70, somewhere in there. So let's just use a range of 0 to 50 so we keep that PE ratio kind of within check. In addition to that, I'm going to check the box here for earnings date, not between now and expiration. I don't want any surprises. I don't want to be in a covered call position that looked good, and all of a sudden the earnings come out. We see a 30% decline in our stock in the first month after we got in the position. Now we know if we're generating 2.5% to 3% in premium, it might take us up to 10 months to get back to break even. So I want to try to avoid that if possible. It's not a 100% guarantee that we're going to avoid a surprise where the stock just drops 10, 15% overnight, but at least it helps us avoid the volatile upcoming aspect of the earnings event if it's a poor earnings. All right, let's navigate over to the technicals. And we're just going to keep this simple. I'm going to look for an average stock volume. Average number of shares traded over the last 90 days. This one is measured in thousands. So if I wanted to see only those stocks that trade at least 500,000 shares on average per day, we'd put in a filter of greater than 500. I'm actually going to go mid-range. We're going to put in an average stock volume of 750 to reflect we only want to see stocks out of the entire universe of options where the average stock volume is at least 750,000 shares traded per day. In addition to that, although we could use things such as the Bollinger Bands, the MACD, historical trends, the number of days the stocks cross the 20-day or 50-day, we're going to keep it simple. And I'm just going to look for stocks that are currently trading above the SMA 50s. That's the simple moving average. If you prefer to look for stocks where maybe you're looking shorter term, you are doing one of those weekly screens, so maybe you'd want to look for stocks that are trading above the 20-day moving average, sort of a shorter time frame. And many of you may want to look for stock where the 20-day moving average is above the 50-day or the 50-day moving average is above the 100-day. You can simply pick and choose which ones you want to see, and a little customize that simple moving average field as well. Now, that's all we're going to do for the stocks. And did we do a lot? I mean, do we do anything advanced? Well, a couple things you might consider advanced. We didn't do anything with the list. We're not narrowing it down to a specific stock list. We told the system we wanted stocks that are mid to large cap stocks and have a good average stock volume. We want some good liquidity. We want stocks that are in an uptrend, had to be within our price range of $5 to $75 per share, and maybe a little bit advanced. We put in an earnings per share growth to look for stocks that show positive earnings and stocks with a PE ratio between 0 to 50 as well. And importantly, we're avoiding stocks that have an earnings date between now and expiration for our covered call positions. Not very advanced. Those are common things you'd look for when you think about the profit and loss chart and the basics of a covered call screen. Now let's move over to our options tab. We put in the basics of our expiration time frame. We're looking 10 to 45 days out in time. I'm not going to put in anything for implied volatility range, or undervalued or overvalued options. I'll address that in a moment. But if that's something that you use for screens, you could put that in as well. What I'm going to do is keep it simple. I know that I lowered my range down to 10 days, so we're going to have to think about our minimum return capability for the shorter time frame as well as the longer time frame. So I'm going to put in my downside protection. I want at least a 2.5% downside protection, which again is simply the option bid price divided by the stock price. So this reflects technically how far the stock can drop before we're losing money on the position. My percent return if assigned. Of course, if the stock's trading above our strike price and we're looking to be assigned, we may be doing in-the-money covered calls below the current stock price, look for a higher probability, knowing we'd have a smaller return. Normally, if I was looking for December, 35 to 40 days out, again, we'd have a downside protection minimum of 3%, maybe a percent if assigned of around 2.5% or more, at least 2.5%. But taking into account that we're using some of the weekly options, we may be looking for positions that are at least 10 days or 12 days out in time with a standard November expiration. Let's again keep our percent if assigned right now at 2%. Probably going to find a lot of December securities that offer that. But for the weekly ones closer in, we're going to narrow that down. Now, I'm not going to worry about range in the money or out of the money at this time. But again, if you just wanted to look for in the money covered call positions at a higher percent return if assigned, a higher downside protection, a lower maximum percent if assigned, we could just put our percent range in the money. Let's go 2% or 5%. You'd have a higher probability of getting assigned and earning that return, but of course your return would be smaller. And the number of strikes, you can use that as well. That's just the steps on the ladder. So if we're looking at a $50 stock, a stock trading around $50, the 47.5 would be 1 strike in the money. The 45 would be 2 strikes in the money, and so forth. Whereas the 52.5 would be 1 strike out of the money, and the 55 would be 2 strikes. I prefer to use percentages, usually at around 2% or so in the money or 2% or so out of the money, depending on the search I'm looking for. Okay, now the option bid price, based on how many contracts on average you trade and what your commission costs are, you probably do have a minimum requirement for your option bid price. We're just going to start off with a basic one here of 50 cents. But again, if you only wanted to look for covered call positions that offered at least $1 net premium or your bid price, we could put that in as well. I'm not going to worry right now about bid-ask spread, percent probability assigned, and Black-Scholes values if it's undervalued or overvalued, just like IVHV. The last thing I'm going to do is just focus on my option volume today and my open interest, the liquidity of my options. As a general rule of thumb, minimum requirement, Ernie and I recommend, let's say on average you trade 300 shares of a covered call position through your portfolio. Some are maybe 1,000 shares and 10 contracts. Some are maybe just 200 shares and 2 contracts. But let's say your average is 300 shares and 3 call contracts against it throughout your portfolio. Well, minimum, what Ernie and I suggest is you should look for an option volume today at least 5 times the number of shares you're planning on trading. So we'll look for a minimum option volume today of at least 15 contracts and an open interest of at least 10 times the number of contracts you're planning on trading. So we'll look for maybe an open interest of greater than 30. If you prefer more liquid positions, that's fine. You could put an option volume today of at least 100 and an open interest of maybe at least 1,000 or more, depending on which type of securities you will identify. Okay, so we're just going to start with the basic there. Option volume today and open interest, greater than 30. Now, is that highly advanced for options criteria? No, we selected our time frame, 10 to 45 days out. I looked for a minimal downside protection, taking into account that those that are 10 or 12 days out are going to have smaller downside protection. We still have to make it worth our while, so we want at least 2% return if assigned. Minimum option bid price of just 50 cents, and my option volume today and open interest, some basic values. Let's go ahead and submit this search and see what we get for our trading results. Well, on the first page, we see our top 20 results here, and down below we see that we have 89 total covered call results. So out of the total universe of options, roughly 4,500 optionable stocks and ETFs, we don't include indexes because you can't do covered calls on those, but out of the entire universe of stocks and ETFs, with just that basic criteria, and we are crossing multiple expirations, remember, weeklies and standard expiration from November to December, we've narrowed it down to only 89 results. And again, was there anything in this criteria that was extraordinarily advanced? Maybe you could consider the earnings per share growth and price to earnings, or maybe you might want to consider the liquidity, but in general, these are the basic things you should be looking for in a covered call set. We want stocks in an uptrend that have shown good performance. We want a shorter time frame to get a better annualized return if we're selling premium month by month by month or week by week even. We have to have a return that matches our criteria and a downside protection as well. Now, why are we only seeing the December results on the first page? Aren't there any weeklies that would have matched, that are 12 days out, maybe 19 days out, maybe 20 days out? There have to be some weekly positions. Here's one here that's 32 days out, the first week of December. I'm sorry, the second week of December is 32 days out. Why is this dominated by those that are 40 days out? And it's because I chose to sort my results by the highest percent if unchanged to lowest. So naturally the ones with the highest return are going to be the ones with the static higher premium. And those with the static higher premium are going to be the ones that are further out in time for our search results. Now, we could sort it by time frame if we wanted to, closer in. We could change this instead of looking for a percent if unchanged from highest to lowest to highest. Let's change the sort and go ahead and submit that search. And now we see some of our options that are 12 days out, but ironically, we still have some of the ones that are 40 days out in time that are offering that lower percent if unchanged of around 2% or so. Okay, now, we have 89 total results. I'm going to go back to that normal filter there. We have 89 total results. That's a good list. We've narrowed down the universe of options quite extensively here, and we did that very quickly. That's the power of the search tool here in PowerOptions, not just for covered calls, but for all strategies. But I want to narrow this down a little bit more. A good, manageable list for your search is around maybe 25 to 40 results. You don't want to have 150 or 250 results because it's going to take you too long to further research and analyze those positions. You want to narrow it down to just those ones you're comfortable with and have a nice manageable list that you can go through and further research and analyze those stock positions and the options to make sure you're getting the position that best suits your risk-reward tolerance. Well, one of the first things I might do? Well, if I'm comfortable with 10 to 45 days out in time, and I'm comfortable with a minimum 2% return, but I want to narrow it down, I'd also be comfortable with those positions that offer a minimum of 2.5% return if assigned, still within my time frame, and still offering a 2.5% downside protection. So let's increase our percent if assigned a little bit, get a little bit more greedy for lack of a better term, but we know we have the results that we can do that, and let's go ahead and submit the search. Okay, so now we've taken it down to 67. Not bad, but we could narrow it down further. Some of the things we might do at this time, let's just think about what we're doing. We're comfortable selling covered calls that offered at least with the stock criteria. We're not going to adjust the stock criteria too much now. Now we're sort of fiddling or increasing or decreasing our options criteria. So another thing to say is, well, if we're comfortable with getting a minimum 2.5% return on positions that are at least 45 days out in time, wouldn't we also be comfortable getting those positions that are less than maybe 30 or 35 days out in time? So let's shorten that. Let's take out the Decembers essentially and keep it in closer to a 30-day time frame with our increased percent if assigned. And now we're down to 15 results, ranging from everything from 12 days out to 18 days out, 25 and 32. So we've gone in December the second week. We narrowed out the standard December expiration. We still might want to include that again, depending on what minimum premium you were looking for and what your return goals are for your covered call trading plan as well. But this is now a nice manageable list. And we've got a couple double listings here. We've got 2 for United Continental, 3 actually, 2 for Micron Technology, 2 for Skyworks Solutions. You know, looking at the November 62, 25 days out in time, and the November 61, which is 18 days out in time. So you'd have to consider which one best suits your needs. Some of these for UAL, we have the same expiration date, November 28th, 2 strike prices with the same expiration date, the 55 and the 54.5. And we're kind of pulling hairs at that point. It's only a 0.1 or 0.2% difference. The best covered call is really going to depend on what your outlook is for the stock going forward. However, if you do run a search and you see that a lot of your covered call opportunities are dominated by one particular stock or ETF, there is a way you can filter that down. Before we create a basic search for ETFs, what we'd want to do now, if we're comfortable with these results, we like our screen, we'd go ahead and click Save at the top of the parameter field, and this would allow us to enter in a search name. So we can call it something along the lines of My Covered Call Screen. And then you can put in a basic description. Let's just say 10 to 35 days out, 2.5 downside, 2.5 return minimum. Okay, if you just wanted to put in a couple notes there, you can do that, or you can leave the description blank. It's entirely up to you. Let's go ahead and click Save this search. After I've saved My Covered Call Search, we'll now see it at the top of our search tool in the parameter field. So when I log on, if I log off now and then tomorrow morning I come back into Power Options, I go into Covered Call and I go into Search, I'll be able to select this screen or any of my other default covered call screens that have been created during webinars, or we could go to one of the default searches that are available marked with a double asterisk as well. Now, let me keep the same criteria here for the months to expiration, minimum downside of 2.5%, bid price of 50 cents, volume and open interest. But I'm going to go with technicals. I'm going to keep the stock volume and I'm going to keep the stock trading above the 50-day moving average. But for the fundamentals, let's just take out the mid to large cap. Let's bump this up. Let's bump up the stock price for $5 to $200. We'll take out the earnings per share growth. We're going to take out the PE ratio. And I'm also going to take out that checkbox for earnings date. But we're going to go into lists now. And let's just select indexes and ETFs. Okay, so we're going to screen just against indexes and ETFs. But again, we won't see the indexes in the covered call screen because you can't buy shares of the index and do a covered call. Well, let's go ahead and submit that search and see what our results are. Okay. Well, this is something along the lines that I mentioned. Note here that our first 3 results are all on JDST. We have dollar strike differences that are 12 days out in time. We have other JDSTs in here, the Gold Miners Bear 3 times ETF, and the Junior. I'm sorry, there's a Junior and a regular. We have several dusts in there as well. UNG, dust again, ERY, Bear 3 times ETFs, UNG, the natural gas ones there again. So you've got a mixture of a lot of strikes of these 3 and 4 times ETFs on this listing here. Well, maybe I want to narrow that down a little bit more. Okay, and let's narrow that down by going back into lists and telling the system that we either don't want to see any inverse ETFs, but I'm going to select leveraged ETFs. I don't want to see any of these ultra long, ultra short, 2 times bull, 2 times bear, 3 times bull, 3 times bear. I'm going to remove the leveraged ETFs, and let's go ahead and submit that. Now I know what we're going to get, but I'm doing this as an example. Our list is predominantly dominated now by options that are just 25 to 32 days, 18 days, and 12 days out in time, by UNG, the natural gas, and then the inverse volatility. Well, I probably wouldn't want to mess with that, so I could choose again to remove the inverse ETFs, or if I just don't want to see SVXY at all at this time, we can go back into fundamentals, and I can tell the system to remove SVXY. Let's submit that. Now we know we're just dominated by UNG. Now, what is one of the reasons why we're dominated by UNG, even though we're crossing multiple expirations, anywhere from 10 days out to 35 days out in time? We've got representation of the 3 weekly series, 4 weekly series, 12 days out, which is the standard November expiration, 18 days out, 25, and 32 days out, so the sort of this 3rd week, 4th week, and 5th week. But why are UNG the only ones that appear? Well, it's because it's more volatile. And when we're looking for ETF positions, we've got to take into account that things such as the cubes, SPY, IWM, the Russell 2000 ETF, and DIA are going to have much lower returns, much lower premiums because they're less volatile, which leads to a lower downside protection and a lower % return if assigned. Let's take this down now. When looking for ETFs or dividend-paying stocks, you're going to have to be conscious of lowering that downside protection expectation, the % return if unchanged, and the % return if assigned, because they have much lower volatility. Let's lower both our downside protection and our % if assigned to only look for positions at least 1.5% or more, see if we increase these results a little bit, hopefully with other securities other than UNG. Well, there's IWM and there's DXJ, but still not a lot. Let's try one more set. We're going to drop it down to 1. Okay, so earlier the question came in, can you do monthly covered calls or weekly covered calls on the Qs for profit? You can, but you're not going to see the type of returns on the cubes or SPY again as you would see on something such as a standard stock that has more volatility like Starbucks, Green Mountain Coffee Roasters, Netflix, Amazon, things of that nature, or even UNG. Now we've opened it up. Here's a good Q screen, and here's a good example. It's not the standard December expiration. We filtered that out. But the first Q covered call we see, the stock's at 101.96, we could sell the slightly out of the money, really at the money, 102 strike call for $1.41. This gives you a 1.4% downside protection and a 1.4 max % if assigned for a 32-day time period. So can I use the cubes to generate covered calls on a 25 or 30-day period? Yes. Should I expect a high return of 2.5 to 3 to maybe 3.5% each month doing that? Absolutely not. You're going to be in the 1 to 1.5% range just based on the volatility of those ETFs. Here's a shorter term one, the 25-102. It's only offering a 1.2% return and 1.2% downside protection. And those are the only cubes that we see that had at least a 1% return if assigned and a 1% downside protection. And you may ask, well, where is the closer in November 12-day out or 18-day out on the cubes? They don't have the return. We had to go 30 to 25 days out minimum to find the return. You notice that SPY isn't even in here. Okay, the SPY might actually be below its 50-day moving average, but SPY isn't in here. Could be due to the premium or to our restriction of looking for a stock or ETF that's in an uptrend as well. But we do have some of the other ones in here. The Russell 2000, as I mentioned, the Semiconductors Holders Trust, and this Japan one, which I wouldn't do as well. Now, back to previous conversation, I have 5 covered calls opportunities in UNG, all with 50-cent strike differences and different expirations. Well, if I just wanted to narrow this down to one strike that offers the best % if unchanged for my results, we have a filter here in the price and strike price difference field for all strategies now, but in covered calls. I'm simply going to check the box for one result per security. And let's go ahead and submit that to our list. And there we go. It looks like the 22.5 December, which is 25 days out, makes sense, gives us the best % if unchanged of the UNG positions. Why is that one showing and not the closer in ones? Well, because I'm sorting it by % if unchanged, and naturally the option that's further out in time would give us the higher % if unchanged due to higher time premium for more time in our position. We've got a slightly in-the-money call on IWM and SMH as well, slightly out-of-the-money covered call. And then there's the cube position, December 102, with that 1.4% yield, the best of the 2 opportunities on cubes by % if unchanged, which I chose to be my sort results as well. Okay, so we're at roughly 5:50 right now. I thought this was only going to be a 30-minute presentation. Well, I apologize for going a little bit further. If anyone has any questions, go ahead and send those in now. we're going to review in just a moment. But I wanted to quickly show everyone in the last 5 minutes here. Earlier we talked about identifying positions one stock at a time. Well, there's 3 ways to do it. We have under the covered call menu a simple quick find tool. So let's say we weren't going to look just for new covered calls in the cubes. So I'll put in QQQ, and I've got, let's put in 100 shares, and I have a basic neutral sentiment. I could go more bullish or I could go more bearish. I'm going to select neutral. Well, let's click the button for MOT. This stands for money on the table. What is the money on the table right there for QQQ? Now, this went out roughly to those 25 days out, standard December expiration, I believe. I'm sorry, the December 20th expiration, yeah. And what we're seeing here is it's just showing us we could generate $129 by selling that strange 102.63 strike. After the splits and everything, they've got these weird strike differences now. But again, this is offering us just a 1.3% downside protection. We could go to the at-the-money call, the 101.63 right now, and this would offer us a 1.8% downside protection, but probably only about a 1.2, 1.3% return if assigned. This is a quick way to see the downside protection and the cash that's on the table now for your covered call position, but it's not showing you all of the strikes, and it's really not showing you maybe all of the details that you want. This is why I prefer to use the option chain. Under the covered call tab, I'll click option chain when I'm looking for covered calls one stock at a time. Let me go ahead and type in QQQ. Let's just click get chain. All right, so we have our whole list of expiration dates and strike prices. Well, here's the one that's 4 days out. Well, let's go to November expiration. I'm going to keep it just calls only. We're going to look at the small chain. And the reason why I like to use this field is our chain on PowerOptions does show you those 3 important criteria for covered calls: downside protection, percent if unchanged, and the percent return if assigned. And we have the current stock price. We have extra columns now that we didn't see on that quick find report. We've got our open interest, the volume, implied volatility, delta. You could add other Greeks as well. You can view the range in or out of the money. The percent probability above is the theoretical probability the stock will be trading at or above the strike price of your call position at expiration. And so you can see the different views and the different more columns, more advanced research here as opposed to that quick find tool. And we can also just go to the static expirations and compare the different strikes. Here's those ones that were available when the split occurred with the cubes there. And so you have those strange 101.63, 100.63, 100 strike, 99.63, 99, and so forth. But again, you can directly compare for the different strikes the percent if assigned and the downside protection to see which one gives you the best results of what you're looking for. So if you want a little bit more downside protection and you're willing to give up a little bit percent if assigned, of course you'll be going slightly in the money. But there's a range where this becomes too deep in the money. For example, yeah, it'd be great to have almost a 4% downside protection, but is it worth it for a 0.6% return for a 30, 40-day trade? Not really. We can do better than that. Even though we don't have the greatest probability, we might want to look more in this 1% range with a 2.4% downside protection, or whatever best suits your expectation of the stock or index or ETF going forward and risk-reward tolerance. But that's why I prefer to use the option chain when I'm looking up positions one stock at a time for new covered call position. And lastly, what if I own QQQ, currently at 101.96, what if I own QQQ right now, my cost basis is $99, and I want to see potential covered calls or other trades? Well, the best thing to do there is to actually enter it into your portfolio tool. So I'm going to go into the profit and loss portfolios. This is where we track our open positions. There's a help videos that occasionally pop up. There's a variety of help videos here for setting up a portfolio and entering new positions. I'm going to change this to just go to a basic example here. This is a webinar portfolio that we used, and we just named it Trade Monster X7, bunch of numbers and letters. What I'm going to do is enter in my long stock position. So we're going to enter a new position as long stock. We're going to keep the math simple. We'll just use 100 shares of the cubes. And we'll put that we bought it in around Halloween. Let's just say October 30th. And this paper trade, let's keep it at 0. But let's put in $99 per share. All right, so let's add new position. This will now be entered into our profit and loss portfolio on PowerOptions with some of our other positions. These are all mostly paper trades. There are some actual trades in this account that are in my portfolio, for example. But here's our cube position. We have a gain of 296, or roughly 3%. Well, what I can do now is I'm tracking the position in the portfolio, and this is any strategy, whether it's a covered call position, whether it's a long stock position, whether it's a collar. Well, we can go to the Position Actions menu next to our Stock Position and Position Analysis. The Position Analysis gives you a breakdown of your current position that you're tracking in the portfolio. You have your basic profit and loss chart and some detailed links to further research and analysis. And then down below, you'll see the opportunities for some covered call screens, covered call opportunities. However, what's different about this listing is that the returns that we're seeing here, the percent if assigned and the downside protection, are based on your cost basis that you entered into the profit and loss portfolio instead of the current market price of 101.96 as we saw in the option chain and on the quick find tool. And once we see these results here, we see that, okay, well, we could go shorter term to that 25 days out. Let's focus on the 25-102 call that we saw before. I'm sorry, December 5th. 25 days out, the 102 strike call down below here. This gives us a 1.2 downside protection. And we saw in the option chain that right now it also give us a 1.2% if assigned. But based on our cost basis, this is actually a 4.3% potential return if assigned. We've got a 49% probability of the stock being above 102, getting assigned, and earning that return. Well, it's great to see things numerically, but as always, it's better to see them graphically. So as I'm evaluating a rollout opportunity from the Simulate Trade feature, I can go into Simulate Trade. And here's a side-by-side comparison. On the left, in red, is our existing position. We have that 3% unrealized return right now, infinite profit potential if the stock keeps going up because it's just a long stock position. We're still risking 100% of what we entered into it. We could sell the current 102 call for the December 5th expiration for $1.19. This would take our cost basis down to $97.81 per share. And if we got assigned at 102, that would be a 4.3% return, and we've given ourselves a 1.4, 1.3% downside protection as part of a hedge for generating that premium. So again, if you're looking for a new position, a new covered call, one stock at a time, I recommend using the option chain to get the best view, multiple strike prices, and as well as you can have more data selected in there. But if you already own a stock, you have a different cost basis, it's best to enter it into the profit and loss portfolio, start tracking the position there, and then you can evaluate your rollout opportunities by going into that position analysis view, and then from the position analysis view under the More Info button in the profit and loss portfolio, you'll see your rollouts, and then you can simulate those trades to see the side-by-side comparison. And if I already have a covered call open, and I link to this position analysis view, I'd still see rollout opportunities for rolling up my call or rolling down my call depending on what the stock has done. But the new percent return if assigned a new downside protection would be calculated based on my entry price and all the premiums I've collected or buyback costs I've put in for rolling my covered call position. So you always have a perfect view of where you stand right now in your position and which rollout opportunity would best suit your goals for either maximizing your upside return or potentially protecting and minimizing the risk field down below. All right, well, ladies and gentlemen, that's about all we wanted to discuss today with using the search tool for covered call opportunities, going through some of the tips there, and also looking at some of the tools for evaluating covered calls one stock at a time. To review the basic tips for identifying covered calls in PowerOptions, when you're in the covered call menu, you can use the default criteria in the main search tool, remember they're marked by those double asterisks, or the sample searches as a stepping stone to reach your own personal search. It's always best if you start off with a sample search, one of the default searches, to only adjust one or two criteria at a time and submit those searches after you've adjusted it. If I take that sample search that we used, that broker and advisor recommended, and I changed 8 criteria on there and hit submit, I'd likely see a message that said, we're sorry, there are no search results that match your criteria. Okay? Well, I just want to do one at a time to narrow it down slowly and get to that nice manageable list. don't feel overwhelmed. I know when you first go into the search tool, and even if you've been in the search tool many times before, when you look at all of that data that you could see for the options and for the stocks, it can be overwhelming. Don't be overwhelmed. Start by using the criteria that you use in your own trades. What do you look for in a stock that would purchase? Even if it's just something simple as, hey, it has to be in this stock price, I have to have a minimum average stock volume, and I want to be in an uptrend. Even just those three. Start with those and then start narrowing it down later. Don't feel pressure to use every available criteria in the fundamentals, the technicals, and so forth. Excuse me. Because if you put everything into all the criteria that's available for the fundamentals, technicals, and options, you wouldn't get any results. It would be too restrictive. Now, base tips on creating your own search. Remember, start off by clicking Clear These Filters. Input those settings that we just talked about. Input what applies to you. You probably already have a trading plan written out of your minimum option requirement for your covered call, the stock price range you want, and some of the basics. So use those first, just those settings that apply to you. And if you submit your results and you have over 100 results, for example, or over 200 results, that's okay. Just start increasing some of those fields or adding other ones one at a time to narrow your results down to a nice manageable list. If you get to a point where you see the message says no stock options match your search criteria, you've got to open up those criteria a little bit more. Don't be so restrictive. And it's not even about being restrictive. There's also the unfortunate thing about being unrealistic. If I'm looking for covered calls that expire on Friday, on stocks trading in an uptrend that have relatively low volatility, that are good, stable stocks that have shown good growth, and I tell the system I want to see those stocks that have a good earnings per share growth, PE ratio, large cap stocks, good average stock volume, trading in an uptrend, maybe even pay a dividend, and I want to see a 5% return if assigned and a 5% downside protection, I shouldn't be surprised if I see no results. Remember, if you're using a weekly series, you've got to scale back your expectations for return and premium. And if you're using larger cap stocks or you're looking for indexes or, ETFs, those broad-based ETFs, covered calls on SPY, QQQ, DIA, for example, IWM, you may have to lower your expectations for the percent return even if you're going 30 or 40 days out in time. Okay? And always remember to submit your search before saving it. Go through a couple iterations of changing your criteria and submitting that search before you save it. Remember, when screening for ETFs, you can remove the inverse or leverage ETFs. It's always a good idea. And when screening for dividend stocks, it's always best to not use a stock list first. Don't use the S&P 5-star. Don't use the IBD 50. Leave it open. And also, if you're looking for stocks that have at least a 25 or 30% historical volatility or an HV, historical volatility of 0.3 or greater, you're going to have to lower that down because a lot of the dividend-paying stocks like Johnson & Johnson, Kraft, things of that nature, typically have a lower historical volatility. Not all of them, but many of them do. All right. And a question here from James. When I came on, it said that I had 17 days left on a subscription. I never applied for a subscription. What is the subscription for? James, I think what you have is a current trial to PowerOptions. I think you got a 30-day trial as a bonus for buying one of our other products. And when you first logged on to PowerOptions, that's when that trial period started. So to me, that means that you probably started your trial 13 days ago. So you have 17 days remaining on that 30-day free trial you got as a bonus from purchasing one of our other products. But I'll take a look into that for you after the webinar, and we'll send you an email verifying, of course, what that means. I think what you got there, James, is you picked up a product recently, whether it was one of our books at Trader's Library, or if you picked up the Blueprint or the Home Study Kit over at Radioactive Trading, you received a 30-day free trial to PowerOptions as part of a bonus for purchasing that product. And that's why you're signed up for that trial period right now. We don't have your billing information. You're not on a subscription. We'll start billing you automatically. You're just on a trial, and it looks like a 30-day trial that still has 17 days remaining on it as well. And in regards to that, just to let you know, our subscription services, our 20-minute delayed service gives you access to all the tools and all 23 different strategies, plus the portfolio tools. That's $60 per month right now, or $660 for the year, annual subscription. We do offer a 20-minute delayed service right now with our historical tools, so the back testing tools and the different strategies and running historical searches, and that's $100 per month. We offer a real-time service. So you have access to all of the tools plus the portfolio tools and other research analysis tools, but with real-time quotes instead of 20-minute delayed, and that's $100 per month. And then our upper level service, the real-time plus historical plus access to our API, is $140 per month as well. Well, I didn't see any other questions. We went a little bit beyond where we wanted to today, but we got a lot of good information in. If you think of any questions later on after the presentation, when you log on your PowerOptions account, remember you can just click that free coaching session link, and you can schedule a coaching session. It's essentially a 35 to 45-minute phone conversation with myself or Ernie. We'll walk you through the tools on the site, answer any questions that you have. You can email us at any time to support@powerop.com. You can also give us a call during market hours. You can reach us toll-free if you live in the U.S. at 877-992-7971. If you're outside the U.S., you can reach us at 302-992-7971. Of course, there's contact links on the bottom of every Power Options page as well. Ladies and gentlemen, thank you for joining me once again for today's presentation. Later on this week, Wednesday at 12 noon Eastern Time, we're going to do a replay of the Managing Your Spread Trades webinar. We had a sort of a bad recording, a glitchy recording, so we wanted to redo it to get a better recording. So we're going to do that Wednesday at 12 noon. And then Friday at 4:30 p.m. Eastern Time, we're going to have our open discussion customer topics presentation. You can register for those right at PowerOpt.com as well under the webinars link. Once again, everyone, have a fantastic week. We hope to see you soon on one of our live presentations. Take care and happy trading.